Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. A quick look at what the market is doing because Nifty managing to hold on to the 300-point gain that we saw in the last hour as well. And as of now, also almost near the day's highest point is what the Nifty is trading at 24,145, 146 levels, just around the 300-point uptick for today's trading session. Some of the names that we should keep an eye out on in today's trading session, specifically coming in from the broader end of the market. Let's look at Just Dial. We have Tata Elxsi, we have Suzlon Energy, Sterling and Wilson, as well as Nippon Life AMC among some of these names that are buzzing in trade as well. So surely interesting to watch out for where we'll be seeing the next half and next couple of hours of the trading session. Where that's going to be headed is going to be interesting to watch out for if we still sustain the gain. But today, as of now, so far so good coming in for the markets. But let's move on and get started with the show for today. This is the show where we solve all your stock related queries, and to solve all those queries today, we have our experts joining in with us. Ashish Kyal, CMT author and founder at Wave Strategy Advisors, as well as Gaurang Shah, Senior Vice President at Geojit Financial Services, to talk to us about the markets as well as solve all your stock-related doubts. Good afternoon, gentlemen. Thank you so much for joining in with us. Ashish, we have come past the 24,000 level. What are we watching out for in terms of levels now for the Nifty as well as the Bank Nifty?
Hi, afternoon to you and all the viewers. See, in this kind of a market where it's just one side rally, I think giving a level is going to be futile because it's not stopping anywhere else. The only simple thing that one can do is follow the trend. Unless we see a close below the prior day low, continue to be in the market and keep riding it on the upside. Having said that, over short term, yes, the indicators are overbought, but that does not mean that you have to sell. You have to keep looking for any dip that you can get around 24,000. Enter into the market. On the upside, maybe 24,300 is the level that we can look at. And on the downside, the support is going to be around 23,900 level. That's the level that you can look at right now. Nifty Bank has been leading the way all the way on the upside. Now at lifetime high levels, there is a very strong outperformance. And I think if you look at the weekly time cycles kind of a study, the overall trend has reversed on the upside for the next 6 months to 8 months time frame. So the overall perspective for Nifty Bank is also positive, as long as the gap on the downside over short term is not filled. The support is going to be around today's low for Nifty Bank, which is 54,700. And on the upside, there is no hurdle because it's at the lifetime high level. So having said that, maybe the psychological 56,000 mark is the next level that one can aim for.
Okay, keep an eye out on those levels over there for the Nifty as well as the Bank Nifty. But on that note, starting with the first query for today, we have Kirti Shah, who's writing to us from Gujarat. She's holding 50 shares of HDFC Bank, and this is at a price of 1,800 rupees per share. Wants to know whether she should continue to hold or sell at the current levels. Gaurang, coming to you, good set of numbers that have come in from HDFC Bank over the weekend as well. Not only HDFC Bank, even ICICI Bank. So private banks seem to be doing well. Should she continue to hold?
Thank you so much for having me on the show. Very good afternoon to you and to all the viewers and to my good friend Ashish Kyal. Well, the numbers, if I have to compare ICICI Bank and HDFC Bank, I think ICICI did a much better job. That doesn't mean that HDFC numbers were ugly. They were more or less in line with what we had penciled down. And our estimates, Vinny, at Geojit Investments Limited, is that the entire banking pack, be it private, public, or as a matter of fact, strong NBFCs, they would possibly report good numbers not only for this fourth quarter, but also for some quarters to come by, even in this and the next financial year. And one should have a dedicated allocation towards banking and finance if you do have a portfolio in the stock market. So we have a positive coverage. Long term, continue to hold on HDFC Bank.
Okay, continue to hold on HDFC Bank. Ashish, your view on the charts and technicals, any different?
No, absolutely. This is the first sector. So how do we identify the leaders that are going to be there? The first sector, after a strong correction that outperforms, can be the leader for the next bull trend that might come up. So looking at that, I think HDFC Bank can also continue to outperform. We are seeing some kind of a short-term profit booking in today's session after the uptick that it showed at near 1950, but the overall tone remains bullish. I think the stock can touch 2,000 levels over the near term. On the downside, the support for the stock is the previous peak, which was 1882. So 1882 can be the support and 2000 is the target.
Okay. Keep an eye out on those levels over there for HDFC Bank. Let's move on to the next query, and this is coming in from S. Jayakumar, writing to us from Tamil Nadu, holding 1,000 shares of Swiggy. This is at a price of 343 rupees. I beg your pardon, 352 rupees per share. Stock is currently trading at 343 rupees per share, making some bit of a loss. And he's a short-term investor. So, Gaurang, what should they be doing with Swiggy? Might as well just book that little bit of loss they're making or continue to hold Swiggy?
Honestly, I'll leave it to my good friend Ashish Kyal to answer this because it's a short-term comments. But then let me give a broad view about the quick commerce universe. We are going to see a couple of more names coming into this quick commerce. But let us not forget one thing, that Zomato and Swiggy are the two oldest and the largest player in the quick commerce segment. New competition coming in can create certain discount related issues from a short to medium term point of view. But if you have to ask me the survival of the fittest, then our view at Geojit is that both Swiggy and Zomato will continue to perform well. Maybe there will be 1 or 2 quarters wherein numbers may not come in what has been anticipated, but long-term growth story remains intact. As a disclosure, on Swiggy's IPO, we had a subscribe recommendation from a long-term point of view, and on Zomato, even in the IPO and currently, that is eternal as of now, we remain positive from a long-term growth story.
Okay, surely keeping an eye out on that. For Swiggy and Zomato, the perspective that we've gotten from Gaurang. But on the charts and technicals, Ashish, what are you looking out for in Swiggy? And it's a short-term query, so should the viewer just book out their profits right now?
No, I think he bought at around 352 and the stock is at 343. So he's incurring some kind of a loss. 352 is the hurdle from where the stock has reversed 2 or 3 times. So I think he can hold on for now. And if 352 is taken out, we can expect the stock to go even towards the level of 380 on the upside. So the overall consolidation is going on in this stock. Zomato has outperformed Swiggy to some extent, but Swiggy is yet to catch up. I'm optimistic that it can go to the levels of 380. Hold on to the stock here, but maintain a stop loss on the downside at around 329. Since he's a short-term trader, it's important to use the stop loss of 329 and 380 is the target.
Okay, keep an eye out on those levels over there. 380 is a target over there, so something interesting to watch out for from Swiggy. Next query for today, Hindalco, that's the stock we'll talk about. Himanshu is writing to us from Noida with an investment query. He's asking if he can buy Hindalco at current levels, and this is for the long term. And what is your view coming in on this, Gaurang? Hindalco, is it a good bet, or would you be picking up something else from the sector?
No, so, Vinny, as a brokerage house, we remain positive on both ferrous as well as non-ferrous. As a play in copper, aluminium, steel, we believe copper would do much better in terms of commodity prices in the international commodity market. And on Hindalco, we do have a positive coverage. That's a disclosure from my side from a long-term point of view. Provided you have your investment time horizon, when it comes to metal related, Vinny, you need to have at least 1.5, 2 year plus. 2 year plus would be a more comfortable time zone because it'll take that much of time for the headwinds in terms of global events which are unfolding to settle down and for domestic consumption to look much more strong.
Okay, and your view coming in for Hindalco, is it attractive at current levels, Ashish?
See, from the long-term perspective, I think there is some kind of a shift in the overall economic cycle where we have started seeing interest-sensitive sector as a whole to do much better and can do much better. So I would be focusing from, if I have to put money from a next 1 year perspective, I'll be focusing more on the banks, financials, real estate is where I think it's much better. Hindalco on the charts, there is no sign that it's going to go down. But overall, I think it's better to be staying with those interest-sensitive sectors and maybe stocks.
Okay, keep an eye out over there for what Ashish was mentioning as well, and Hindalco specifically. Let's move on to the next query for today. We have, this one is coming in from Shashi Rathod, who's writing to us from Bangalore, holding 40 shares of Tube Investments. This is at a price of 620 rupees per share that bought it some years ago. And he's asking if he can hold the shares for further 2 more years, or does it make sense to book out of the profit that he's making? Gaurang, your view coming in for Tube Investments, right? Good amount of profit. Should they book out some of this profit or make sense to hold on for a longer period of time of 2-3 years more?
Well, first of all, the investment is at a very decent level, Vinny. Let me admit this. And two more things. If you are concerned about the rally and if you are worried about your capital, though let me give a disclosure, we do have a positive coverage on buy side on Tube Investments and auto ancillary company. But in case if the investor is worried about his capital, since he is getting this kind of a phenomenal return, at least bring home your capital or maybe some percentage of your profit, and that much quantity he can sell. If not, if he or she has a relatively higher risk appetite, we believe there is still more headroom left in Tube Investments. Our targets, Vinny, from a long-term point of view, is 3,000 plus. So if you're not in a hurry, stay invested. If you are concerned, then maybe you can bring home your capital, but stay invested.
Okay, bring home your capital but stay invested if you're worried, but otherwise it makes sense to stay invested as well, as what Gaurang is highlighting. Your view coming in on this, Ashish, levels, anything attractive? Are you expecting a further run up in the near term?
See, if you look at the entry has been excellent. I think it's at around 620 levels, and the stock is now at 2575 odd. So the overall tone over short term, there has been a correction that we saw, but there is a very, very important support which is placed for the stock at 2400. There has been multiple bounce back from that zone. It came very close to that again, and it's bouncing back. So my suggestion will be hold on with 2400 as a strict stop loss. On the upside, there is a possibility the stock can again move towards 2,920. So that's where he can look out to book some of the profits.
Okay, that's a word coming in there for Tube Investments. Let's move on to the next query. This one is Samvardhana Motherson is the stock that we'll talk about. Raghav Jain is writing to us from Mumbai. He's holding 80 shares of Samvardhana Motherson. Price is 80 rupees per share. Wants to know whether he can buy more of the shares, or what should he be doing this with this one? Samvardhana Motherson, your view coming in on this, Gaurang, given that so much of these geopolitical tensions, trade wars that we keep hearing, what should one be doing with Samvardhana Motherson on that uncertainty front?
Well, it has a decent exposure to overseas market, Samvardhana Motherson, Vinny, and US is a decent part of that export market that this company provides to. Uh, don't know what is going to happen in terms of the 90-day window post that, what is going to happen, whether there's going to be rethinking, whether Indian government is going to be having a dialogue. We already know Vice President Vance has landed in Delhi, and there will be some dialogue between Indian and the counterpart. If there's going to be a mid-road that can be paved out to have the impact to the minimal as possible. Having said that, from a long-term point of view, point number one, hold on. Point number two, if whether you want to add to it, well, you got it at 80. If you're going to add at 130 plus, it's going to bring up your cost of investment. If you are able to digest that, and if you have a elevated risk appetite, remember one thing, there are uncertainties for the next 3 to 6 months in terms of tariff clarity impact. But beyond that, we think there is a lot of positivity for auto ancillary sector as far as export market is concerned.
Okay. And your view, Ashish, on the charts and technicals, what would you suggest the viewer do?
See, I would recommend to hold on over here, not to add up right now. Like Gaurangji rightly said, there can be headwinds over next 3 months, 6 months. It can be little tricky. So do not do not pyramid right now. But short-term pullback is possible for the stock towards 150. That's the retracement that we are looking at on the upside. The fall has been sharp and wild. We can expect a pullback to come towards 150. So hold on for as of now. And on the downside, the support for the stock is at around 125, which is the gap area.
Okay, keep an eye out. Hold on, don't add more. That's a word coming in from Ashish as of now. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more of your stock-related queries after the break. Welcome back to Your Stocks on CNBC-TV18. We still have our experts with us, Ashish Kyal, as well as Gaurang Shah, to solve all your stock-related doubts. Gentlemen, let's move on to the next query. Now, this one is coming in more from the railway side. We have two stocks that the viewer wants to know on. Wesley is writing to us from Goa. Investment query. So one is Titagar Wagons, others Jupiter Wagons. What does it make sense to invest in this one, long-term as well as short-term view? So Gaurang, let me take it to you first. Titagar Wagons as well as Jupiter Wagons. What's your view on this one? Because it's so far in Q3, they've spoken about delays in those orders that were coming in, especially from the Indian Railway side. But now does that seem that we'll be seeing that change, and your view on both these stocks?
Well, Suvini, I'll restrict my comment on the sector and maybe not so directly in terms of buy, sell, and hold. Now, let me give you a perspective. We've seen major rehaul happen in terms of Indian Railways, whether it is to do with the bullet train that is on track, Mumbai, Ahmedabad, Mumbai, or whether it is to do with Vande Bharat, or increasing the speed of express trains, or introduction of new trains, improving the last mile connectivity, upgradation of tracks, upgradation of railway station, so on and so forth. So there is a lots that is happening in with respect to Indian Railways. Now, which are those companies which will get benefited over a longer period of time? Definitely with the kind of upgrade of coaches. I think names like Titagar Rail, Titagar Wagon, Jupiter Wagons would be the straight out beneficiaries from a long term point of view. There has been a slow space because of the kind of work that was supposed to have undergone. That run rate was not happening, but in the future it is likely to complete. So these companies, along with the IRFCs and the IRCTCs and the RVNL and Railtel of the world, would be the direct beneficiaries of the modernization stroke change that is happening in Indian Railways. What I'm trying to say is that things will not happen overnight. For things to materialize and improvement to come through and for earnings to improve will take time. But Indian Railway sectorially and the companies which are associated with Indian Railways, they are a long-term play in terms of earnings improvement on fallback of order intake.
Okay, that's a view coming in on the sector. More stock specific, Ashish. Titagar Wagons as well as Jupiter Wagons. What would you look at? Which one is better? Any other railway stock?
See, if you look at both of these stocks, the chart structure is very similar. I mean, both of them are showing a very similar kind of an up move, then a correction that has happened, and both have them bounced back from an important support. So, having said that, the overall trend for I would prefer Jupiter Wagon over Titagar because it shows little outperformance, bounce back sharply from the 300 levels, now around at 388. So, the overall tone for Jupiter Wagon looks to be little much better, but I would prefer IRCTC over these stocks. That looks to be showing a much better structure and relative outperformance, relative ratio outperformance. So my pick is going to be IRCTC, which can now move towards the level on the upside at around 840, 850. And on the downside, the support for that stock is around 740 or 744. So my suggestion would be if you can invest into IRCTC, that is a much better pick.
Okay. IRCTC is a better pick is what Ashish is highlighting. But if you want to still buy from Titagar Rail or Jupiter Wagons, then Ashish prefers Jupiter Wagons. That's the word coming in there. But let's move on to the next query. We have Mohit Khanna who's writing to us from Mumbai, and he's holding 500 shares of Morphin Labs. This is at a price of 26 rupees per share. He's asking if he can continue to hold the shares for another 2 years time period. Morphin Labs, any view coming in on this one, Gaurang?
Vinny, I'm sorry, I'll give it a pass because we don't have coverage on this.
And your view, Ashish, Morphin Labs, I don't think everyone tracks it too closely always, but Morphin Labs, anything on that one?
Yes, we can see there has been decent enough correction. It went all the way to 100, corrected to the lows of around 42, which is more than 50% correction from the top that we can see in the stock. But right now, there is some kind of base formation and it's trying to recover back some of the losses. So my suggestion would be hold on if you have the investment right now. On the downside, the stop loss has to be maintained at around 49.50. And on the upside, look at the levels of around 64 where you can book out from the stock.
Okay, surely keeping an eye out on those levels over there, 64 on the upside, downside. Also, the stop loss is what Ashish has mentioned as well, around 49. So keep an eye out on that. Let's move on to the next query. This is an investment query that we have coming in from Rashi Jain from New Delhi. Gaurang, she's looking at the auto ancillary names and she wants to know, is there anything attractive that you're finding that one could look to buy for the long term right now?
Well, there is definitely, but remember one thing like we discussed, for auto ancillary names earlier, something like a Motherson, Samarthan Motherson. There is going to be headwinds in the near term, but notwithstanding that, if you're long term and a little bit of elevated risk appetite, then we do like auto. Look, if auto does well, Vinny, auto ancillary tire battery manufacturing will do well. And for these companies, replacement market is also a big opportunity other than the new auto market. So we like Uno Minda, CIE Automotive, and Bosch. These are the three names in the equipment related. In the tire side, we like Apollo Tires and JK Tires. In the battery universe, we are positive on Amara Raja Mobility as well as Exide Industries. So the auto ancillary sector is positive, provided you are capable of, which going through the difficult times immediately from a short to medium term point of view in terms of the tariffs and issues related to that.
Okay. A lot of stock names that Gaurang has mentioned as well, specifically for each different kind of auto ancillary that you are interested in. You have the names coming in there. Ashish, your view on the charts and technicals, you are finding any interesting in that sector?
Yes, if you look at Apollo Tires, I think it has done very well, formed a double bottom, showed sharp recovery from 375, now at 460. So if you can get some kind of a dip in Apollo Tires, use that as an opportunity to buy. The targets can be at around 500 and possibly higher. The next stock is Exide Industries. We can clearly see it is also breaking out of the downward sloping channel, managing to move above its 20 DMA. So the overall tone for Exide Industries also reversing on the upside can be a good entry at this level. Risk look a little less. On the downside, the support for the stock is at around 354, and we can expect it to touch the levels of around 440 over near term.
Okay. Surely keeping an eye out on those stocks over there and the auto ancillary names. Let's move on to the next query. This is coming from K. Sachin, who's writing to us from Chennai. He's holding 270 shares of Bandhan Bank. It is at a price of 301 rupees per share. Obviously, from the buy price, his stock is currently trading at half of that level, 167. He's asking whether to book the losses or continue to stay invested in this one. Gaurang, your view coming in for Bandhan Bank, given that bank side is doing well now, does it make sense to continue to hold Bandhan Bank or just book your losses and invest your money somewhere else?
Well, so Vinny, if you have elevated risk appetite, I would advise hold on, possibly accumulate since you got in at higher level. The stock is trading at about 167, 168. Improvement in terms of earnings visibility, let me be very, very clear without mincing words, it's going to take pretty long. But it is not like the turnaround is not going to happen. It will happen. It is a matter of time, and possibly the changes that have been happening in the top management would possibly bring in the improvement in earnings sooner rather than later. But to go on to the level where the investor has invested, I think it's going to be pretty long. He can do one thing, he can average not at current levels, but maybe you get Bandhan Bank at maybe 150 or sub 150. You can average, bring down your cost, and then possibly think about a reasonable exit in terms of your investment. But it's going to be a long wait.
Okay, it's going to be a long wait, is what Gaurang is highlighting. On the technicals, anything different, Ashish?
No, I concur with the view of what Gaurangji is saying. I think the overall, there are a series of hurdles on the upside for the stock. I think right now, the immediate hurdle is going to be around 184, 185 levels. And then if it manages to cross that, because it has been forming lower high and lower low, which is the overall trend of the stock. Having said that, if he wants to invest, I think Axis Bank or ICICI Bank can be a much better pick as well, because ICICI Bank touched the 52 weeks high, and we can clearly see a very strong outperformance that has come over here. So it has been emerging as a leader in the space. So private banking space looks attractive as of now, and I think ICICI or Axis Bank can be a diversification if he wants to invest more.
Okay, Ashish, thank you so much for that view coming in. But that was the last query for today, gentlemen. So thank you so much, Ashish, as well as Gaurang, for joining in with us on the show as always and helping our viewers solve all their stock-related queries. And viewers, thank you so much for tuning in and sending us your queries. Keep sending us your queries and email us your queries. The address is flashing on the bottom of your screens as well. The top of your screens, I beg your pardon. So do send us your queries. But that's all the time we have on this edition of Your Stocks on CNBC TV 18. Thank you so much for tuning in. Up next, you have Closing Bell.